In this video, we will go over the risks of investing in YieldNodes, a popular crypto investment that has been going around since 2019 and gives an average of 8% interest every single month. Is it a Ponzi scheme? Will it crash during a bear market? What do you need to know before investing? Let's get into it. So today we will explore the 4 main potential risks of YieldNodes and how they could affect the performance of the project. We will discuss the risk of rug pull, the risks of the project being a pyramid scheme or Ponzi scheme, the risk of mishandling of funds, and the risk of project failure. The first risk we will explore is the risk of a rug pull. For the ones that don't know the term, rug pull means scamming the investors of the project and running away with the money. In this case, I will go straight to the answer and I will say that in my opinion it is highly unlikely that this project will perform a rug pull in the future. And I will explain why. First, YieldNodes is an ongoing project that started in 2019. This is not a concluding factor. However, as many of you may know, 99% of projects that want to rug pull do it so in the first few months. A project just doesn't survive over a year and even less 3 years with a sketchy team waiting to perform a rug pull. But even more, the main reason I think the chances of rug pull are near to none is because the team is fully public. So we know their identities and we have seen their faces in pictures and interviews all over the internet. This would make them accountable in case they wanted to scam or perform a rug pull, so it would be foolish for them to do so. So in my opinion, I think there is no risk of rug pull in this project. The next risk we will explore are Ponzinomics. We will debate if this project may or may not be a Ponzi scheme. A Ponzi or pyramid scheme is a scam which depends on people joining or investing in it so that they can pay the rest of people that invested earlier and that are on top of the pyramid. So Ponzi schemes have no true income streams or real businesses behind. This model is unsustainable. Unfortunately, it is a common scam in the crypto space. In this case, I don't think the project is a Ponzi scheme because of 2 facts. First is that Ponzi schemes don't tend to last long, as when they grow, they get to a point where the project is unsustainable because the base of the pyramid scheme gets astronomically big. In the case of YieldNodes, the project has been working really well for 3 years without any issues to withdraw the money whatsoever, so I doubt this is the case. The second reason I don't think YieldNodes is a Ponzi is because they don't give a fixed return. Instead, the returns given to investors every month is linked to the earnings that YieldNodes got that month with the Masternodes and other staking mechanisms. For example, last month of April the return was 8.3%, but this month I expect it to be a bit lower, around 6 or 7%, because the market is bleeding at the moment. But I'm happy with that percentage, mainly because that makes the project sustainable. They give the returns according to the earnings YieldNodes got. So if a bear market comes and most of the project Masternoded coins decrease in price, I expect the earnings to be a bit lower. But I prefer this rather than a fixed APY that is unsustainable. So that's the reason why I think YieldNodes is not a Ponzi but a real business. The third risk we will explore is the mishandling of funds, referring to the ability or inability of the team to protect the funds and investments the company has. In these regards, multi-signature wallets and lockup periods are the standard in the industry. However, in this case, after reviewing all the documentation I found, I couldn't find any information of what security measures the team may have in place to handle the investors' funds safely. If you have any information about this, let us know in the description below. So without knowing about this, every investor should decide if this is an important risk for them or not. In my case, I'm willing to accept this because if the project has been running for so long, I believe a critical fault in these regards would have already shown notable problems. And the fourth and final risk we will explore is the risk of YieldNodes failing as a project. In this case, I am not really concerned because of what we said before about the sustainability of the project and how the monthly interest lowers when market conditions are harder. But even more, I think the key here is that they have diversified the projects that they provide the masternoding service to, having more than 20 projects that they are masternoding for. I could expect some of them may be failing in the future, but having more than 20 projects, I doubt all of them will fail. So for me, it's a calculated risk I am willing to take. So this is it. Remember that this was my own analysis based up on my preferences and opinions as an investor. I just wanted to open your mind about the potential risks of investing in YieldNodes, so if you decide to do so, you do it having the most information possible and taking into account the risks involved. However, this is not investment advice and you should always do your own research. That said, if you want to get started with YieldNodes and get around 8% interest every month, check out the link in the description. If you enjoyed this video, leave a like and subscribe to see more to the point crypto content. And if you want to see my full review about YieldNodes that only last 4 minutes, check out this video. Thanks for watching and see you in the next one.